Hey guys, good morning, welcome to the live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Hey guys, welcome to SST. My name is Ron, my partner is Dave. Welcome guys. Good afternoon guys. Good Friday. Welcome Juma Mubarak to everybody. How's everybody doing? How's everyone's day? Okay, so we had NFP today. It was pretty exciting. I know you guys love trading gold, so gold was a sell right off the hop. We can see it right over here. So we moved down and we found a little bit of a bounce, kind of send a little buy signal over here at 2008, and it's kind of driving right up to almost maybe going to hit this next daily of 2020. So welcome guys. Thanks for joining everyone on YouTube. I appreciate all of you guys. This is like our pop-up sessions. I was going to do something more structured for you guys, like we're going to start from the basics. Maybe we'll do it next week, where it's going to be an introduction to Forex, learning what are pips, ticks, points, and then we're going to introduce a basic candlestick to you guys, because I see some of you guys are always asking questions about. I think you guys need to start, we need to do this structured with like a live webinar, and I'll have it structured for you guys. So I'm really excited about that too myself, because I'm very passionate about teaching and educating and things like that. So we'll get that started next week, guys. Today I want to do more of a chilled Friday afternoon session with you guys. The snipers in our group want me to look at. We're going to look at EU, and we'll maybe do another quick top down on Dow, and because I have the Bookmap over here, guys. So it's in these 15-minute increments. Also, we're watching live liquidity in the market too. If you're trading gold, okay, be careful on a Friday, okay. Make sure, because they might get a little volatile going into the close of the markets, and positioning itself for the weekend and things like that. So before we get started, guys, if you guys are looking for a broker, we recommend HankoTrade and AAAFx. Check them out. AAAFx is a regulated broker, and it actually gives you a bonus. If you deposit $100, they match it with 100. If you put in 500, they match it 500. That's something nice. And so if you're looking for a broker, always start with a demo, no matter what broker you're using, to see how their spreads are, their commissions, their slippage and things like that. So that's what we recommend. Before you deposit any money with a broker, go demo, okay? So what we're going to do now is, today was NFP, okay? So let's just review. I want to be on the same page with you guys, because a lot of traders didn't even know what NFP is today. So we had our news come out at 8:30 a.m. Eastern. This is what we were looking at: average hourly earnings, non-farm employment change, and unemployment rate. So you can see a lot of green, okay? So which was good, like green shows good. So what unemployment is people in the United States, are they looking for work? So we want these numbers to be like a little bit lower, which they are. So they show green. This is what confuses some traders. 3.6 was the forecast, and actual was 3.4. It looks lower, so they consider it, why is this not red if it's lower? This is actually good. It's lower than the forecast, so we have less people looking for work. That's good. That's why if you were looking when this happened, that news, and then you're watching the US dollar at 8:30, that's good for the US dollar. That's why we had the US currency shoot up. And if you were trading the pound or the euro at that time, that's why it dropped. If we were trading gold at that time, that's good US dollar, kind of opposite correlated. That's when gold dropped all the way down here. And we didn't really have a significant impact like in the stock market, like on Dow and NASDAQ down in here, because you can see that it's not entirely correlated with the US dollar. The markets, more GBP USD, Euro USD, and gold are more correlated. But and then we had 9:30 open, which was a really nice open in the markets. Most snipers got in the buys here and held for quite a bit, so that was good. So we had a really good day trading the market. So remember FOMC, it was a rough day. It was a very difficult day for most traders, but yesterday was much better on the volume side, and today was a great day. Today was not bad for Friday. When we look at everything, it's not bad. Gold was a nice drop, but it provided a good opportunity for a bounce buy. And how many of you guys took the signal in the free Telegram? So hopefully you guys looked at that signal and maybe it helped you guys. So we sent out a signal, quite a few of them today. So even, when we were looking at AUD JPY yesterday, okay, we had this set up from, I personally don't trade AUD JPY, but you can see that signals find all types of things. I'm not very much into trading Forex as much as I used to, but this is I actually traded this because the signal looked good and it's running 60 pips. If we kind of look at the commodities over here, this is with the updates and everything like that, where we were looking for this area, like over here. But you see how the signal, how it came out to look at this area, okay, when it comes down here. Now is the bounce, okay? So now we got to also judge where it closes, retest, and things like that, where to place your stop loss below a particular zone. And then once it starts to run 20, 30 pips, it's standard to go to a break even. You don't need to, but if you want to control your anxiety and your emotions, you're in a break even trade. Now it starts running 40 pips, starts running a little more, 65. Here we got Hezbollah counting his cash. There he is counting his cash. Biden, come on, man. And then over here, like a little silly, you got a little pattern forming over here. And our target was kind of 2014-15 and still running a little bit. And yeah, like two lots can bank you that much money. If you have the account size to do that, and you're willing to hold. But there is opportunities for everybody in the markets, guys. Okay, so some days are going to be worse than others, and some days are going to be really good. It's our job as traders to identify what is the good volume, what is the good liquidity. Okay, so before I get to do any top downs for our afternoon, I want to explain what this is, because this might go over your head. This is Bookmap, okay? So this is a live liquidity feed, and this is a depth of market. It's live, so it's giving us like futures contracts in the market. And so what it is it's on like 15-minute time slices. Normally I have it on 5 minutes, but I find that maybe 15 is better for us. Maybe 5 is too fast for most traders that are unfamiliar with what's going on here. So I can see right here 12:15, 12:30, 12:45, 1 p.m. right now, like when we started, and then we'll see when 1:15 comes in, you're going to start to see these dotted lines. So this is aggregated volume. So we can see we're coming up to maybe test the previous high, like around 12:25, and we can see if we're watching candlesticks, we can see that high right there was 12:25 where it got rejected. So kind of there was an exhaustion. You can see that there was no more buyers. You can see like the green bubbles. There's no more inside here. So that's showing that the buyers are exhausted, and then the selling pressure pushed it back down. down into here, and then we don't see any more like kind of transactions coming down here. So even the selling pressure got a little exhausted down here. Then the buyers bring it right back up, and now we're trying again to break this critical area. It's kind of like a double top happening right now. So we can see right above us exactly how much supply we have above us. So you can see there's a lot of offers, a lot, 49, 32, 16, 20. So, but we also have bids below us too. So this is where it's going to kind of consolidate. It's going to be a fight here. It's going to be like an auction. So we're going to see who is going to win this battle here. If the bids win it, they can take it higher and maybe come up to these levels of supply, but maybe it's going to come up and then go right back down. So these are the things that we have to watch. We're above the VWAP right now, which is technically good, but we got to build more bids below us. Because you can see that there is a little bit more offers above us. So I'll explain this slowly. We'll do maybe a whole session on this. We're getting together like an order flow boot camp, getting ready to kind of explain things like this and order flow and volume and things like that. And then over here, this is the depth of market. So these are all pending orders in the market. These are the bids below us, and these are the offers. The market executions dictate where the market moves. Market executions are a buy and sell like on spot. So those are what drives the market. These are just pending orders waiting to be triggered in the market. These do not move the market. The market executions move. That's the aggressor. So you and I have to figure out who is the aggressor in the market. Is the seller the aggressor? Today, is the buyer the aggressor? Who is the aggressor in the market? And then all of here is the session volume profile. This is where we can see like there's some thin volume transactions up here. There's some thin volume. So like this big dip down here, it was kind of on thin volume. This is where most of the volume is concentrated. That's where the heart of consolidation is, like right here. We're spiking. These are like those impulse moves that break out on low volume, okay? So let's get started again. Let's start off with the Dow. Let's go a fresh chart, okay? Normally, like in the afternoon when I'm trading, I'm just doing my continued chart that I've already done. But for most of you guys, let's just do a quick new chart to get started. So I'm going to delete all of this stuff. Okay, so let's look at the daily, okay? So really quick. I'm not going to do like a top down like we did yesterday. That one was more of a thorough one. This one we're going to say, okay, so we had the 4-day, Monday, Tuesday, Wednesday, Thursday, and look at today, beautiful, okay? So it's a nice bullish day in the markets on NFP. So we have, again, let's locate our high and low of the day. So we made a high today, and we just kind of got rejected at there. So our high is 33,625 today. Our low is an ignited bullish daily candle, just continued from the close of yesterday and started to come up. So when you're doing your analysis, I hope some of you guys had this area located. How many of you guys had this area located? Be honest. Okay, did you guys have like a yellow line somewhere around here? Did you guys in Zoom? Did you guys have this area located? Okay, because remember we opened and now we're coming up maybe to 50% of this red candle, and if we're continuing to come up, maybe we're going to come up to where this body closed and see how it's lined up with all of these wicks to the left over here. And now if we're continuing to push up, where could we potentially go? So our next target, maybe the high of yesterday's candle. Okay, did anybody mark that up to know that we're continuing? It's a bullish day. We're breaking yesterday's high and continuing to move. Where could we be moving now? You got to keep asking yourself, did you have like a line right up here or a little lower at that body? So if you did, like here at these body to body transitions, then that's where we came right up to right now. So we're getting rejected. So what happens if we pick up more volume this afternoon and then we have maybe a nice little short squeeze and there's more demand pushing? Maybe we will push right up to here. See like this bodies and wicks lined up. Okay, that's one target right there. We could get, maybe it pushes up to 33,760 if there's a big momentum push this afternoon. But then if you really want to get inside here, we can have some levels. Absolutely, we can look inside here too. So I can now look at like these wicks, like right over here. Maybe line these things up with that wick, that wick, that wick, that wick, like in here, got a body there. Maybe before we approach 761, We got to break our high, and then we come up to 765 and we see what's up here. And if we continue to push, okay, up to there. And then I see the big rejection wick right there. That started that 50% retracement up to here and started to push down. So maybe that's like at the end of the day, you know, if it does come up there, maybe we're going to find some supply and then it reverses back down. Maybe we don't even get here, okay? Maybe that's it. They've pinned it today, and then we're going to start to push down. If we start to push down, we have a lot of volume still left in this body. Where could we come down to? So critical areas now in the market, you see like these kind of 3 wicks over here where we're at in the market right now. Maybe we need to place a yellow line somewhere like right around here. And that's what we're going to be maybe trading around, this yellow line. If we can't hold this yellow line, and let's say maybe they push it down today in the afternoon, maybe it's going to come down to here, this yellow line. If we can't hold it, yeah, we have the big gap. That's a huge volume, okay? That's big. So now we have to kind of look inside this area. Maybe where we have all of these bodies, like right over here. This is one other target right here. And then we'll maybe come down here. And then if it breaks, this is where like demand should be in the market now. Right here at that wick. And maybe that body, okay? So if it ever comes down here, we should see the Dow pick up some volume back in here and maybe shoot back up, okay? So we are clear that we have a big bullish day today, okay? And we've already engulfed yesterday. We're working on more than half of Wednesday, FOMC, and we'll see how strong we close. Don't always just look at Fridays for a nice Friday scalp afternoon session. Always look where they close these on a Friday, because now we can start to analyze where we're going to move next week. So it's very important too, guys, where these daily candles close on a Friday and how they're going to open up on next week. So that's good enough analysis on the daily. Let's move now. Let's break it down to the hourly. So now we can actually see what happened. Now it's more visual. We can see down in here. When did we start to move? So this was London session, okay? London right in here, 3-4 a.m. We pulled out of here, still making some highs. This was NFP, okay? How it didn't really affect US 30. There was some indecision to the upside, downside, close right here. It was more Wall Street. Wall Street was the nice move. So if you guys saw, like we were trading NASDAQ and US 30 in Wall Street, that's what we kind of concentrate on. Apple up 5% today. Tesla was up 5% today. Banks were moving today, so that was good too for Dow. So we had a bullish, nice Wall Street open where we cleared this area, okay? So you see over here now, that's hourly wicks right over here. See these hourly wicks right there? That used to be demand. It's resistance. Here it's resistance. If you brought this green box across, are you surprised that it came down here today at 12 just before we started this call and picked up a wick there? I'm not surprised. Are you guys surprised? If you do your top-down analysis, this shouldn't be a surprise for you guys. Now we can see the hourly rejections are getting rejected at these wicks over here in the past. Okay, so I see those 2 wicks that broke impulsively. That's kind of like demand. But now with volume below, you got to flip this box red. You got to do this and bring it across. You've identified your zone. You've identified your block. You've identified whatever you want to call this. We can name this thing a million different names, okay? Now, we found today we're coming up there. 9 a.m., we got rejected. We came up a higher high, but got rejected again. We came up again and got rejected. Now they pushed it back down and it's coming back up. So we might have a Friday choppy session, okay? You see how it's kind of like consolidating in here? So this is how it's moving on the hourly, okay? So we gotta look for something good. So let's look on the 5 minutes how we're trading. These are the 5-minute candles right now, okay? This was Wall Street's move over here, or sorry, NFP. Then we had Wall Street. Wall Street was beautiful, guys. Like, look at this. 925, we closed right up here. Look at the retest. This was as sexy as it gets, guys. It came down roughly 50%, a little bit above, tapped that daily yellow line and broke. This was our firecracker wick that we were talking about in our private Zoom. And you buy, pullback, scary pullback, like came down here, but it came about 50%. We were telling our snipers not to sell, to continue to hold your buys or buy with the market. So we were trying our best to not get them to sell and get caught on a Friday. And then it continued to push up to here. So that's, you could be done trading for the day and you're out of the markets. But if you still want to continue to trade, it came up here, rejected. To the daily, just barcoding inside here, we broke, now it's retesting, broke a little higher, coming back up. So it's in pure sideways action. So what we'll watch, like, we got to be on the same page here. If we see a good quality buy opportunity for this afternoon, we want to see if the Dow can continue to push for a new high. It's got to break above this supply. It tried multiple times and got rejected quite a bit. The RSI was completely overbought. This was another thing. This is what we were telling traders not to sell. When the RSI goes up to 70, 80, 85, all you're getting is a small pullback, and that's it. This is Wall Street volume. It doesn't care about RSI. Doesn't care about it. So if you're continuing to sell and fight the Wall Street, good luck to you. You know, it's not easy. So we're trading inside here. We're also going to look to see, look at where we came down to. 50% of this this is Wall Street's 5-minute candle from 9:30 to right here. This is a very important candle. This is holding a lot of volume, and we've tested half of it right there, and it's still holding. So if the selling pressure supply can come down and we break half of this candle, that's where maybe we're going to look to maybe sell the market. So if it breaks below here, and then we get that come back up to retest to confirm that this is a supply area, we flip that box red, and then if we get that rejection, it might consolidate here, it might flag, it might come back up for one more fake out to hit all the stops up there. Then when it pushes down, we might see something like that. You kind of want to look for maybe a head and shoulder pattern around that area. So that's what you want to look for. But if we can get that volume to close below here, then maybe we might see maybe an afternoon sell down into here, back down to where it kind of retested this daily. If it doesn't hold, it may push down to this area. Like, you know, when I'm looking at around 50% of that bullish candle, like right around there in that zone, could come down to there. Maybe we don't even get this. Maybe it comes down a little bit and we're going to trade inside here. So what we can do is we can, if you want to trade also like this, okay, inside here, if you like that, okay, measure the move. This is what I always do, and most traders should be doing this. You measure this zone. It's 50 pips, okay? So as a scalper, I can see already we're getting rejected at all of these highs right in here. Right there we got rejected. All of those wicks were getting rejected. So now I found a more local supply area. This is the bigger one. This is resting, but this is more local. This is like right now it's active. It's trading right now. So for example, if I'm watching like 1-minute candles and 1-minute candles kind of close above here and retest this, I could scalp this move up to that red box on 1-minute candles. But I know that my target can be 15 pips, 20, 35, 40, and then may tap up in this red box and just get rejected and come right back down. So if you want to scalp like 1-minute candles, this is where you can scalp that zone, as long as you got good spreads, good market executions with your broker, quick liquidity fills and things like that. But if that's not your style, you could also wait for a 5-minute candle to come and close above here and retest and maybe take that up. And maybe we're going to trade like this. Maybe it's going to trade where you buy this area, come back up. But you might get 10, 15, 20, 30, 50 pips. But 50 is the top until we break out of here. Also for maybe where do we want to sell if you don't want to wait all the way down here. Now just look at other levels. So what's holding this move up? This bullish candle is holding it. So if I kind of find where's 50% of that, maybe I make it like a green box here and I really trap this thing. And then what I could be doing is maybe looking for a nice sell below this level. If I feel like being aggressive on a Friday, I've hit my daily target too, so I don't want to be that aggressive. But what I'm saying is, if it kind of breaks below here and retest, we could get that drop coming down to this area. And if that is what you're looking for, remember, this is scalping, guys. This is not, I'm not looking to take this sell and hold it till next Tuesday. I'm looking to come down, break there. That's about 20 pips, okay, coming down to 50% of this green candle. That could be 20 pips. If we come all the way down to the bottom of the box, it's 50 pips, okay? And then you got to make a decision when it gets here, because this is the big bulk of all the volume from Wall Street. It's holding here. If this breaks, that's where we get that big drop. That's why I'm saying, if you're more of a conservative trader and you're more patient and disciplined, then wait for something down here. You might not even get it today. You might not. Maybe this will have to be for Sunday or Monday or Tuesday, but we will see. But if you're more of a passive, like aggressive scalper, you're still disciplined, you're still patient, but we see what happens here and you're okay with that zone and it makes sense to you, absolutely you can trade that level, okay? Otherwise, we could be looking for something up there. If you are that aggressive trader. If you're not, then wait for something up here. Place an alert on your chart. Alert up here and alert here. Eventually, the volume will come here at some point, okay? But we don't know when and where. I would love to tell you when and where. Okay, so that's how I'm going to kind of keep US 30. What I want to also do is EU. Okay, normally I don't do this on a Friday, but our members requested it. So let's take a look at EU. Okay, just a little quick recap on gold. Okay, so this was a daily target, 2014-15. What we had, we broke above it, grabbed the liquidity, so it was just a little nice pullback. 2013, we broke for a new high up to 2018. Again, a pullback, is still holding nice higher highs. So if you want to draw like a trend line, I know you guys are still trading gold. We do have this nice trend line still holding. So our next target on the daily is 2020. Okay, so we'll see what happens at 2020. If it can get up there, that's a nice opportunity from that 2008 buy. Continuing to move up. Okay, so let's take a look at EU. And this over here is for the Dow. Okay, so you can see how now we're consolidating. See all of this volume. See how it's kind of trading sideways? This is where the big auction is taking place, and that's why we're getting these type of candles that are really, really tight and not moving. So this entire zone, like if you wanted to consolidate this, you absolutely can. Right here, that's our flag. That's where all the volume is concentrated right now. So this small little zone, it's not really moving anywhere. But this could be, look at the pattern, okay? Look what we got here. We have like a bottom, an extended bottom, okay? And then now they brought it right back up. Now we're flagging on a rally. So this is where it could break out a little higher up here. And there's not really like bullish divergence to cause that. So that was just a liquidity grab to the low, right at that demand area, that 50% of that Wall Street candle. So it is holding good support here. But this could be that break that continues to fill. And as a scalper, okay, this is too. If you want targets, so you're not guessing, if you look to the left of the chart here, see here where we have like this big red candle, where was the retest? About half of it, and then push down, come back up and get rejected. So I know if I'm taking this scalp from here to here, sometimes I measure right up to that red line, and I know exactly it's roughly 20 pips, minus 1 or 2 for your spread, minus 1 or 2 for slippage. But some traders have like a TP already registered. If it comes up there, boom, it hits like a bell and you're already out of the market. If that's the way how you want to trade in a zone, that's zone to zone trading. It's not for everybody, but it's a different style of trading. It's scalping the markets, scalping a zone. Okay, so I just want to make that clear to everybody. And let's look at Euro USD. Okay, and Nasdaq is continuing to push. Okay, so we have a strong move in the market. Apple is strong. We had earnings yesterday. Tesla is strong. So naturally, Nasdaq is moving nicely. So let's look at Euro USD. Okay, it's probably very similar to GBP USD. Okay, so what do we have today? Okay, so this is the 5 minutes. If you guys want, we can just jump right in and just start trading right away, but that's not normally what you want to do. We want to teach you guys how to do a nice quick little top down every single day. I'll be honest with you, I haven't traded Euro USD. It's been a couple weeks. I've been more focusing on GBP USD. But if I want to get in and trade, I still got to do the top down. I still got to get familiar with how EU has been moving. So I see over here, this was a big bullish move. They kind of pinned it down when, this is my birthday, guys, February 2nd. So this is Groundhog's Day. I don't know why they pinned it down on my birthday, but maybe, who knows, okay? Maybe there is significance on that. But February 2nd here, they pinned it down on this bullish trend. And where did we come down to? We came down to a nice previous demand zone, bring this box across, make it this big fancy green color, and there you go. Now we see that it held here from previous area in the past. Now we came back up. What did we do when we came back up to this area? Okay, so we broke out for a new higher high on April 13, and then we pushed back down, back into here, but they're still holding good. 50% of this candle, still trending up, but then it got really, really choppy last few weeks. Green, red, still trying to build. But me, I see a lot of wicks up here, so I can see that there is weekly supply up there. But today, what type of candle do we have right away today? It's kind of like a bullish pin bar indecision candle. So we opened right here. We came down, we took out yesterday's low, but it came to a perfect area. Like if you had a line at all of these wicks, that could have been a sniper entry down here. If you're a daily trader, which most of us are not like daily holders, we're scalpers, but you got to have this area identified. And what did we do? We came up today, up to here was our high, and we pulled back, and here's the volume. Okay, so let's go through the motions. Our high of the day of Euro USD is right here, 110.50. We can see that Dow, guys, is popping right now. Okay, so you can see how that was that bullish flag pattern. It's popping out. This is the impulse break right now that's happening on the Dow. And always watch below the VWAP are bids populating in here. That's the question. We're always going to get some impulse breaks, but there's going to be a pullback. And when the pullback happens, are our bids populating down here? So we welcome the pullback. And then the bids get filled so that we can come up with more volume and take out these offers with a new higher high. Okay, so always be watching too. Now, see how it's transacting in here. So it's still filling. Now you watch here the depth of market. See how we're taking this 633, 636 area? This is where, yeah, we just took out a few stages right here. Continue and maybe take out this one. Now we have 12 and 13, 25 offers right above me at 640. I can see that. Now we're taking them out. So you got to kind of watch what's going on below and above. See how we took out those 25? Now we got 16. So bids are continuing to populate. And if we can take these offers out, then it will continue to move to the next area where there's bigger supply. But right now it's still holding up here. Like if I was to show you on the Dow. Sorry, let me just show you on the Dow what's going on real quick. Okay, you see that? That is that impulse break, what I was telling you about, okay? So that's what's happening. Impulse break is right here, but when we came up, we're coming up into the supply area. That's why when it's coming up, you get a wick coming down, okay? So if you're kind of scalping that move, you got to understand where we're moving to. That bigger red area is the previous kind of highs over here. Now, this candle broke out. Okay, so now it just came back down, picked up. Now we're going to break the high. And if we break the high, we're going to tap that red line. Okay, easy pips. If you go into the 1 minutes, okay, right here, the 1 minute broke, pulled back, and now we're driving. Okay, it's like a 3-bar play on the 1 minutes. So there's the zone fill. There it is. See how we broke out there, guys? And that's 20 pips. Okay, maybe you didn't grab the whole 20 pips, but you can grab 10, 15 with pretty much zero drawdown just to fill that nice little zone in 3 minutes. That's as clean as it gets. Okay, and you see now we filled this volume imbalance. Now we're coming up to test. If we can break here, we're going to test maybe 50% of this red candle at 582, 583. My next target is if bulls can take it up, maybe we're going to push up to here, to 583 before you hit that upper supply area. And this is where those heat are. But you see how now all of our bids are populating. The more they populate, the more we can fill up here. And see how big our candle is filling with nice volume? It's looking good. And then all pullbacks, if you ever come back down, make this box green. And we focus on a pullback. But if you're happy scalping 10, 15, 20 pips with minimal drawdown, that's an inside scalp. Okay. Did anybody take this buy in like breaking out? Sometimes there's a time and place when to take impulse candles. Okay. Remember what I showed you here, where it was coming down this pattern, down, neckline, down, they picked up the liquidity. They grabbed more volume down there. Okay. And then remember a bullish flag right here. Bullish flags have a high probability of continuing to break out to the upside. Okay. And that's where it broke out, it closed. See where they gapped up the candle because it gapped it up. Strong demand. Small pullback. And then as soon as it broke the high, it came right up to that red line, that next high. So it filled up the volume to the left. This is scalping, guys. This is a different mindset. But if you have this mindset, you can become a really good scalper in the markets. Do you see how I wasn't targeting like 75 pips? I wasn't targeting 50 pips. I was targeting exactly what the market is showing me. So I don't get surprised. Like this does not surprise me that this move made it to the intended zone because it's just filling this smaller zone imbalance. And that was that from here to here. That's what we call a zone fill, a balance fill right there. Now the market is balanced right there. Now we have bigger offers. So what happens in the market is possible pullbacks coming back down. But when the pullbacks come back down, this is what you got to watch. Is there going to be more bids in the market? Okay, so sorry, I didn't want to come back to US 30, but I saw maybe some of you guys were in buys and took that, so I just wanted to explain that for you. And sometimes, guys, you got to make a decision. When it hits this red line, you got to make a decision. Like when I measure that and it's 20 pips, and I hit 20 pips, that's my target, that's my goal, that was the plan, that was the plan of that trade, and that's it. If it ends up like if you took 20 pips there right at that red line and then it goes up to here and to here, you can't let that ruin your psychology because you're looking at a different type of trading style. Then you're looking for the next zone. So then you got to eliminate this red line and then you got to hold that pullback. And then you got to hope that it continues to fill with volume and go back up. But it could come back down to where you entered. You might be at a break even or you might go to some drawdown. But if you want to let the play to develop, you have to understand this, that you might come up, but then the market might pull back. Like this entire uptrend here that started over here. These guys that are holding, they held that pullback, continue push up. They held that pullback right into here, and it's breaking out for them, and they're possibly still holding. If it pulls back down into here, they're going to trust that it's going to come back and fill with volume and then take out this supply area. So that's how, if you got to hold, you got to stomach those pullbacks. That's just a different type of style of trading, but you can absolutely do it. Okay, so let's move over. Let's finish up our Euro USD. Sorry about that, guys. It's not a rant, but I want to make sure we're all on the same page there because I saw some of you guys took that trade. Stealth, you took that 15 pips, you made $7. Yeah, so that's amazing. Okay, don't look at the dollar value. Don't look at that. Okay, it's nice. I hope $7 is like makes a difference in it for you. But more importantly, look at the 15 pips. 15 pips is, so if we can get 15 pips on one scalp, another 15 pips on another one, maybe 3 scalps, you're at 50 pips a day. And then as soon as you learn how to do this, if you can add more money in the market, you can do really well, or just do a prop firm. Okay, there's different times now. Prop firms, you can do that. Guys, look at, we're still building. Okay, so still building. Do we see any break of structure? That's another thing up here. Do we see any break of structure? Not really. Pullbacks are getting eaten up. And see these sellers, they're getting exhausted. They're trying to sell, but then the buyers are keep bidding it up. This one, they tried to sell and they keep getting bid up. So now it's moving to our next target. Yeah, guys. So that's why sometimes I love trading US 30 on Friday afternoons. You see, like all of this big move. See the volume over here? Very nice volume. Made 20 pips on Nasdaq buy. Good job, Eliod. Amazing. Okay, that's amazing. That's a very good scalp. Okay, so let's just continue over here. Our high of the day. I'm sorry, guys. I can't wait to do more education on YouTube, like where it's a structured education, and then I can really focus on the education as opposed to the live trading. And then you guys will know the title of the YouTube will be Introduction to Forex for Beginners and candlestick breakdown, price action, and it's going to be more of a structured education. I want you guys to join, guys, at all levels. I don't care if today's your first day or you've been in the market for 50 years. We can all learn together. Join on those calls. I want to really do more education, because I feel that that's what we need, a little bit more education. Okay, so today Euro USD, it's a spin top candle, indecision all way. Okay, we opened, we came down. Buyers brought it right back up, sellers brought it right back down, and we're essentially virtually right where we opened. So it was a fun day to scalp this, but for a daily trader, this is frustrating. Okay, it could end. We don't know how it's going to end with buyers in control. So nobody won today. It's a tug of war, 50-50. But what we can do is we got to understand where this thing could possibly go, where we're at right now in the market. Okay, because if we're going to continue scalping for what time is it? 1:40. Maybe we got 2-3 more hours in the market. Then we got to know where it could go. So number one, we do have a critical area where yesterday's body opened. That's where we are. So let's draw a yellow line right here. And if we move down bearish today, where could we come down to? Let's locate yesterday's low. Right here, that's yesterday's low. Okay, so if we push down red, we might come down to yesterday's low. If you're really like a precision scalper, before we come all the way down to yesterday's low, look at right here. We have some critical support right here. So let's maybe place a yellow line around this area where these bodies continue. Body, and then I got a wick rejection and a wick rejection. Okay, so we kind of covered our bases for maybe a bearish day. If we come down to this yellow line, maybe the low of the day. But once it gets down here, see where all this wick, see where the bodies are and the wicks? This is now like your block. This is kind of like your zone. This is now where I draw a big green box here, because if it ever comes back down here, the market is telling us there was buyers here, buyers here, buyers here, buyers here, big bids coming, taking it up here. And again, today it came down right into this box and went right back up. What happens again tomorrow, or sorry, Monday, Sunday, Tuesday? If it comes back in here, this could be a good potential area to buy. If it breaks, it's going to break all support and come down, impulse move right down to here, and then the impulse move will come down to the bottom of these wicks. Okay, so what about upside now? We got our downside covered. Now what happens if we continue bulls close strong into the afternoon? Where could we move up? We got levels. Okay, so let's look. Maybe this is an immediate one right here, this body. So 110.16, we'll watch that area. We're just a few pips away from it, like 3-4 pips away. And then our next move could be up to here, 110.25.27, this area right over here. If we break there, there we go again. Two nice natural side-by-side bodies. Okay, let's place a line there. And then if we break, we're coming to our high of the day. If we break out a little more, like for example, if this comes up green, and it breaks, it's naturally gravitated like a magnet, wants to come and test the previous day's close and open. And then above here, all I have is rejection wicks. So this is telling me there's selling pressure. Every time one of these daily candles breaks out of here, it's got selling pressure pushing it down. So when you have selling pressure, that tells you that there is a supply there. There's offers in the market pushing it down. So what I do to give me a heads up if it ever comes up here is I have that big red box to let me know that this is a pretty important area in the market. Okay, so let's go back to looking what's going on in the market. We had Wednesday, FOMC was a bullish day. yesterday, they brought it right back down. Today, complete like indecision. We opened, they came down, picked up liquidity. This demand area held. We came back up to here. It was kind of a lower high, didn't really touch the supply zone, but came down, and this is where we are. So now let's go into 1 hour. Okay. Okay, 1 hour. Now we can see the moves today. We can see London right here. Here was London, 3 a.m. Big push down. We consolidated going into NFP. Okay, so 4 a.m., 5 a.m., 6 a.m., then 7 a.m. they broke it down. Here's NFP. It kind of came up to where 50% of that previous hourly candle, then it got rejected, then they really broke it down. We lost this hourly support, so it came back down where into that big daily demand area that we identified, and then it bounced. And then since then we pushed. We couldn't kind of take out half of this candle, so we needed to use our other candle to come back down here, pick up more liquidity, come back up, almost engulfed it. Then our next hour, 11, we came back down, break. There's that positive break above there, continuing to come up. We broke above 50% of the previous candle and wick, and now we kind of took out this area right over here. We took it out, and now we're coming back down. So now for scalping this afternoon, let's find where our hourly resistance is right now in the market. It's kind of right here. I don't want to put all these red boxes, okay? So I just want, because Euro USD doesn't trade like Dow Jones. It's a little bit more, the moves are not as big, okay? But what I can see right now is previous levels in the market, okay, right here. Here's a previous level. This was 5-minute demand structure holding. We just broke below it right now, okay? So I'm going to do this thin red box across, okay? So this is where we were consolidating. It broke out. We had a double top, big volume push down, and come all the way down. So now we got to find where's our demand support, where if this thing comes down, where are the buyers going to come in? Below this daily, there's those wicks that came back up. This was previous area of resistance. Now it turned into demand. So if I have like a green box below here, I'm going to place my green box below here. This is more short term. Okay, and then now we're kind of trading in between this critical daily area. Now I know where we are in the market. So what I can do is, if this yellow line is confusing you, I'm going to get rid of it and show you this is where we're trading right now. So we're kind of in this consolidating phase. What happened up here? We had bearish divergence. See where it was making a high, a higher high, higher high, a higher high. But when all of that was happening, what was happening with the strength? It was just staying stable, then finally started decreasing. So that's bearish hidden divergence, and that's why now it's breaking down. So a good sell opportunity was maybe selling this second leg of this M pattern right here, or getting in right here in the market. So now we got into where this time of day, 1:45 p.m. Eastern, is we could trade now sideways inside here for a little bit, okay? And I measure this zone. Okay, you know how I measure US 30? I always measure my zones. If I want to trade inside here, I see it's about 10 pips. Okay, normally this zone for US 30 is 20 to 25 to 30 pips, but here we've got 10 pips. So if you're going to scalp inside here, you got to do the math in your head. Does it make sense to be trading in here? Minus maybe 1 pip spread, minus maybe 1 pip for slippage. This is like maybe you can net 5 pips to 10 pips. If not, we got to be patient. Let's let it consolidate in here. Let's see where the move is going to go. And if it's continuing where selling pressure is in control, maybe we might break this critical daily supply area, and then look at where the volume is trapped inside here. So if I'm taking like a sell from here down to that yellow line, it's roughly 10 pips. Because when it comes down here, just like here where it sold off, it came right back up. But with more selling pressure, it might break and continue to push down, maybe down to here. So that's maybe for a sell opportunity. If we're going to continue to maybe break and close above and shoot up for the double top up here, then we have our location up there. If it comes up there, we got to know that when it comes up there, there was a lot of offers that pushed the market down here. If we get that move coming back up, we need to kind of close above here and then we can potentially take it up to that next level, to that red box, and see what happens in there. Okay, we got to respect it. But sometimes when I'm trading, that it might see here, this is where it was really, really tight inside here. So if you bought, it just came up to that yellow line and went down. That's why measure the move, guys. If this is not the way how you want to scalp, like in here for Euro USD, to that yellow line, it's roughly 5-6 pips. Okay, so maybe that's not the target you want to take. So maybe if you take this trade, we've got to allow it to breathe. It might come up here, retest. When it comes up there, yeah, you might be up 5 pips, but what we're kind of targeting is to get it up to here so we can kind of maximize 10. So we got to see maybe it trades again sideways in here for a little bit, might dance around, but then when it breaks out of here, we're looking to retest this, then we come up there. Then you're officially up maybe 10, 15 pips, then you got to make a move, or you got to make a decision up there. If this is not what you're looking to trade inside, inside here, then wait for something above that yellow line, above there. Okay, so and then this one you got to kind of, you got to use maybe 10-15 pip stop loss to maybe make 10-15-20 pips. You should be getting a 1-to-1 minimum on a scalp, 1-to-1 minimum. Hopefully you can get a 1-to-2, or more. But a lot of scalpers, you know, they look for 1-to-1s. A lot of scalpers too, I want to make this clear. Sometimes when we take these trades, we go right into profit, and we don't have much drawdown. So that's why I always say, well, like sometimes when we take a trade, it's going up 10, 15, 20 pips, and I'm always reminding you guys it's in zero drawdown. So to go to a break even if you can, and then you're right into profit with zero drawdown. So those are, if you can nail those nice entries, like with like an impulse breakout, when and where to take it and things like that, that might help. But this is what we're doing. We're consolidating right now inside here. If we look at the overall like pattern over here, we could be developing our right shoulder of our bigger inverted head and shoulder pattern. So when I look at it like this whole area is kind of like the left shoulder. Today's NFP came down, picked up liquidity, and came back up, and look, we're kind of trading again inside this area. So if it kind of really picks up and then breaks out maybe next week, it could get that big move coming through here and breaking that daily supply, and all of a sudden Euro USD is trading at 110 plus or 111 up here. But then I also see maybe it needs to come back down and pick up more liquidity, because I like when you'll see multiple patterns. So this to me looks like one leg coming down, it came back up, and now if it comes back down and it breaks here, will it come down to here, higher low here, maybe a full double bottom, but maybe it's like a higher low in here, and then it comes back up and does something like this and then gets that big move. So it's all, we got to see what happens coming out of this consolidated area. And so that's Euro USD analysis. Okay, we'll leave it right over here. Yeah, there goes Dow. Okay, right up to the red box, Dow. Okay, so we'll leave Euro USD. I'm gonna clean up gold, guys. I'll clean up gold right beside us. Okay, I'm not going to do a full top down, but I'll just clean it up. I just want to talk about exactly what happened with your Dow. Okay, so you see we made that higher high pullback. The pullback, 50% of the bullish candle, continuing higher high to the red line, pullback. We got a nice new ignited candle pushing right up to basically, now that is a target, guys. That's a full top zone fill, like from here to the red box. That's about 40 pip fill. Okay. Does this make sense, guys, what really happened there? Okay, so we broke this previous high, it broke, it held, and then we took out 50% of that big red candle, and we just came up to the top of the supply zone. And then this could be overall like a big M pattern, you know. No, are pips and points the same? No. So let's clear this up, okay? So good question. That's why I wanted to do Trading Queen. Next week I'm going to do an introduction and what is Forex. We're going to explain all this. Pips, points, ticks are all different, okay? a pip is a percentage in points. Okay, so for every pip, it's 10 points. Okay, so we got to make that clear. Every pip is 10 points. So when a trader says, I made 10 points, they made 1 pip. When they say they made 100 points, they made 10 pips. Ticks are the same as points, but it's more used, that term, in futures trading. They call it ticks. But with Forex, pips and points are completely different. So if I say to you guys that move was 40 pips, I could also say to you guys that was 400 points. Okay, does that make sense? I see a lot of confusion always about this. Okay, so we're kind of stepping down. Let's just clean up gold as well, okay? Because I know a lot of you guys follow gold into Friday afternoon. So this was our top down that we did on gold. This was NFP, okay? So the big drop continued to push down. We had this area targeted, 2008. So this was a nice, we waited for this thing to bleed out. Okay, the RSI came down to 9.25. And it came right down to our daily area here. So this was kind of similar to our call yesterday, and this was a nice little bounce buy, came up to the next yellow line. That was about 60 pips, okay, 600 points, and it was a nice little bounce buy. But when you do that, you got to understand that that could be a dead cat bounce, and you got to get out of the way because there's still a lot of supply coming down. And then it really pushed down to the next daily down here at 2000, that psychological level. If you sold down here, yeah, it was a nice 20, 30, 40, 50 pip sell, but you got to really understand what's going on in the market. So this is where 2008, we sent out that SST scalper buy signal, because if we closed above here and we respected this area of demand on the daily, then we're pushing up. Slowly, it's a slow grind, but we came back up to the daily area, 2015. We broke, pulled back, and came up again to 2018. Double top now, but it's still kind of holding this area. So going forward, trading gold this afternoon, this is what I would be doing. Let's locate a double top up here. We can see that. And then there's our next big daily area at 2020. So if gold continues maybe picking up some liquidity below, and we can come back up and close above these double top up here, we might have momentum to continue to come up to the daily. Maybe 50% of that big red candle is 2023 and could target up there. But maybe all of this supply is going to continue to hold the market down, and we're going to see gold sell back down into 2008 level. Okay, so now you see a critical level at the daily. We're kind of holding here right now. This was a minor close, break, and that was the low, 2013. So if we continue to push, the selling pressure did push it down here, but it got gobbled right back up, and now we're maybe making a little bit of support structure right here. So if gold can continue to break below here, what we need to see is a break down here. We need to see it at least come down to here, 2013. So what will naturally happen is maybe it comes down here and then pulls back up to here. Then if we see it pull back and then it starts getting rejected and we're ready to take out this low, then it looks like a good sell opportunity, maybe this afternoon, maybe back to 2011, maybe back down to 2010, and ultimately back down into this green box. And then when it gets in there, it could bounce, right? Because that is now a local area of demand. So it could be a move. So what we'll look for is maybe also like a close below here this afternoon. And then to push down, maybe we'll target 2011 down there, okay? And now, again, if you want to scalp inside here, this is a big zone from the demand to the supply. So like this ruler, if I'm judging what this zone is, this is this is a big zone, okay? from 2014 to 2018. Okay, so it's nice zone to scalp, but you also have to be very conservative with what you do here. So we got to kind of see, here was the neckline. Okay, so we kind of just broke this neckline, which was previous structure right over here. Bring that across, and this is where we're trading into right now. Okay, if I just lift it a little higher, maybe up to here. Maybe what I'll look for is if it closes above this area, I'm going to make this red, just so we know that maybe if it comes in here, still could be some supply. Okay, so if we can get bullish volume to break and close above here, and maybe we can hold this area, we could maybe look to scalp again, maybe up to that big red box above us. But only if some volume closes above there. Otherwise, this is the area where we're going to consolidate this afternoon for a little bit inside here. And we got to wait for the move. Okay, so right now it's trying to come back up, but we got in a red box, so it's getting rejected. This is where it might consolidate. If it can push down, maybe get a new low in the market, this is what we're going to look for. And then if it breaks this level right here, this is where gold could really drop down into here. Okay, so we'll continue to watch this. Don't force trades on a Friday afternoon, guys. That's another thing. I see a lot of traders love to force trades on a Friday afternoon. You don't need to force trades. Okay, so what happened with Dow? We came up to that upper area of supply and it's getting rejected. Okay, so at some point, the depth of market is going to come in with more offers. And it's going to now maybe pull back to where the entry point was, where it basically broke out of. So if you go into a trade and you're up 10, 20, 30, 40 pips, and again, you do not do anything up there, then the market is maybe going to pull back on you. You might still be in profit 10, 15, 20 pips, but you got to understand it could pull back on you and come all the way down where you entered into your trade. If you can stomach that and hopefully it doesn't come and trigger you and goes back up, picks up, and then it breaks out of here, that's great. Then you go up 50, 60, 70, 80 pips. But for some traders, that's a scalp and that's it. It hit a target and they're in and out of the market. And that's a successful trade. Okay, do you guys have any questions in Zoom, guys? Any questions? What do you guys see? Blair 132243 for NASDAQ. Andres, to find my zones, I do exactly what I do. I go daily, hourly, and right into the 5 minutes. Some traders go daily, 4 hour, hourly, 15 minute, 5 minute. It's all personal preference. It's just you're getting more and more information at each area, at each different time frame. So I prefer to go daily, find out my hourly moves in the markets. Normally all the hourly big moves are going to be pre-London, London market open, pre-Wall Street, Wall Street open, and then at the end of the day, like 2 to 3, 4 p.m. Eastern power hour, and then we'll get another big move when the futures market opens up at 8, 9 p.m. Eastern. So I tend to, myself personally, daily, hourly, 5 minutes. But if you do 4 hour, there's nothing wrong with it. You're just getting more and more information. Okay, so you see Dow, okay, so we pulled back down. Did we break any structure down here? No. So it got a nice bids back into the market and we're pushing back up. Okay, and we're watching now Euro USD coming down. Okay, so thin volume, like light volume. It is trending down. Like if you want to do like a nice little trend line, you can see it is pushing down. It is a bearish triangle. This could be a double top for now Dow. Okay, Nisarg, please don't spam. Okay, you wrote from where should start to do trading 10 times. Maybe you should start by not spamming the channel. That's one start, and then I can answer your question. Number one, where do you start trading? Is you got to start with getting to know the basics. Okay, the basics are learn what is a pip, learn what are spreads, learn what is forex, and we'll teach you all of that. But you got to learn the basics, and then you're going to learn price action. Okay, you're going to learn what's going on over here, and take your time learning. You're not going to learn this overnight. But the more time you invest in it, it will pay off. Okay, everyone. So we have 2 p.m. Eastern. So this is the new hourly candle in the market. Okay, so gold came up to 2015-16. It's a lower high. We're continuing to push down. Let's see if we get that breakdown here. Subscribe to the channel, and what we'll do is next week we're going to start a little series of just introduction for beginners. Okay, so I want to start as if everyone is a beginner. We'll do some live education. That's what I like the most, and then you guys can ask questions while things are happening. Kind of want to have it structured where we do it in order so everyone is on the same page. The Dow had a dragonfly, this candle right here. Yeah, so yeah, see now how we're pushing, guys? We're pushing right back up, nice pullback. So if you're selling, that's your pullback sell. Today is a very, very strong day in the market, okay? So if you go back and look at your daily candle, always, guys, refer to your daily candle. Okay, even if you're scalping 1 minute or 5 minutes, look at your daily candle. Okay, ask yourself, do I want to short this bullish candle that's ignited? They gapped it up, no pullback. It's been strong demand all day. So you kind of want to short the top of this volume. This is what, honestly, guys, I'm asking you, because this is what a lot of traders are trying to do. They're trying to short this right now, and look how much volume you have below you. Okay, so you are shorting a train, like you're shorting a Mack truck right now. So you have to be very careful because you could get caught on a Friday where you think it's going to sell, it's going to sell, it's going to sell. And what happens is they're just small minor pullbacks, and then the bids are continuing to take it up. So if we're looking to sell today, this is what you're selling against. This big massive green candle this is a daily. This is not a 5-minute candle. So you have to be very careful shorting today. Unless there's break in structure. Gold is breaking down now. Okay, that's why the big sell today would have been right here. If we broke this area, when it came down here at 1245, if this area broke, yes, then we maybe would have sold off, but it held right here. So that's why we're getting this big injection of new volume in the market. So that's why we filled this entire zone. Now we're going to possibly break out for the next move. Maybe up here. Okay, gold now. Yes, gold is breaking down. Okay, so see, it's breaking down. This is what we call an impulse candle break. There's the break. Okay, get ready. Okay, so it just broke. Now let's see if it will retest the breakout area. Right here. Okay, does it come up green? And also look at the body, the candle. Do we have a wick on it? No. So it closed right near the low. So this candle that's opening right now at 205 is opening green side by side. So we're going to see how far up it can come. If it gets rejected hard, it's going to break a low, and then it might turn red and come down. If that's the case, where could it come down to? Right here, 2013.86 on the dot. Okay. But no, it's a bullish ignited candle. So we're going to see, can it come up to retest the breakout area? There's the rejection. Okay, so turning into a shooting star candle, pushing down. Now, this is an opportunity if you like to sell. And then it may push down to this red line and it may come down further. Or we can wait for the official close and retest up here. That's one opportunity to sell. Okay, some setups are like that. They push down and it's a shooting star candle. And sometimes you sell that shooting star candle and then it's a big red candle coming down. So you have to give or take. Not every single setup is always going to happen. You know how many times I've tried to short that move right there? That exact same move. I can't tell you how many times. It was a big bearish candle closed near the low with no wick. Next candle opened, ignited. It was a short wick. It turned into a shooting star and I sold it and I went into 10, 20, 30, 40, 50 pips profit. Okay, I can't tell you how many times that's happened. But in this situation, that same exact move did not work. Okay, so you got to understand, all candlestick patterns are not 100% guaranteed. Nothing is guaranteed in trading. The only thing you can do is try your best to get in when you have confirmation of volume closing, a retest, and sometimes if it doesn't work, now you got to know where to place your stop loss. That's another thing. Traders, I find, don't know where to place stop loss because they don't know their account or risk management. So they have no idea. Number one, they don't know what lot size to use. They have no idea where to place stop loss. So they're just guessing. They're guessing when to get into a trade, guessing where to place their stop loss. That's not trading, guys. We don't guess when we trade. You got to know levels of the volume of the market. So for example, if you took that sell on that shooting star candle, and most traders did sell there, now the market is coming up. Where could it come up to now? Okay, so it still has not broke above this area, this red box that I have identified. So if it does come up, maybe about 50% of that red candle. If it can still hold, then maybe we're going to have now supply coming down in the market. So if you took that sell, your stop loss number one should be minimum 50% of this candle. That's very, very tight. I would, like, these wicks tell you something in the market where it came up here and got rejected. It came up here and got rejected. So maybe some traders, when they get into a trade, they look at local price action, and then they place their stop loss above previous areas that got rejected, because this is telling us something. When the market came up here, it got rejected, it got rejected, it got rejected. So if it ever comes back up again, we're hoping that it will get rejected, but a little lower, because we want those offers to continue to come down. So that's maybe when you get into a trade, how to know where to maybe place your stop loss. But you also have to do this. Okay, for example, if you sold down here, if you're placing your stop loss above those wicks, it is roughly 20 pips. 20 pip stop loss is standard for gold. But you can see that it's above the wicks. Some traders go a little bit higher. They go 25, they go 30 pip stop loss, but they're not looking to scalp for 10, 15, 20 pips. They're looking for the full breakdown of the move. Okay, so, and then when you say 20 pips, now when you say what lot size are you using, these are all questions that you need to answer yourself. So for me, for example, if I'm trading with a standard lot size, okay, standard 1.0 standard lot, which is $10 per pip trading gold. So if I get into this trade and I place my stop loss above those wicks, I've measured the move as 20 pips or 200 points. So I have to accept that if my trade comes and triggers my stop loss, that I've lost $200. Those are facts. Okay, you got to know that. If that is too much for your account and you can't accept that, then I can tell you 99.9% you are over leveraging. If you get into a trade like that and you set your stop loss at 20 pips, you shouldn't be panicking. You shouldn't be stressing out. You shouldn't be sweating. You shouldn't be watching your MT4 whether you're red or green. You should be following your price action. That's what you should be watching. Because if that's a comfortable risk, you should be only risking 1% of your entire account for that trade, and then you can work out exactly what lot size, what to use, and things like that. That's what, if you're a beginner trader, these are the things that you need to learn right away as a beginner. You don't want to learn these things 5 years down the road after you've lost all your money. It's time to start to learn these things right now. Is a pip a tick? A tick is a point in like when we're talking in the futures market. futures, they use ticks. A pip is 10 points. It's kind of like the fifth decimal place. So it moves 0, 1, 2, 3, 4, 5, 6, 7, 8, 9. Those are points. And then when it gets to 10, it makes 1 pip. And then again, it's kind of like a clock. It's kind of like seconds, kind of counting. And then again, it goes 1, 2, 3, 4, 5, 6, 7, 8, 9. That would be 19 points. Then when it goes to 10, it makes 2 pips. Kingsford, if you're always watching your MT4 and it's red or green, then you're losing focus. You're trading on emotions. Okay, I'm telling you the honest truth, bro. You're trading on emotions. You know how many times I get into trades, guys? I'm in multiple trades on live with you guys. I'm answering your questions. I'm answering people in Zoom. I'm watching my own trades. People are text messaging me. I got a lot going on, but I very rarely am I looking like at my MT4s. I'm watching the charts that I'm in, but because I know I'm not over leveraging my account. So I've already accepted the risk before I even take the trade. I'm always thinking in my head, if I take this trade, I got to know what I'm getting. I got to know my results for my take profit. And then if it goes against me, I got to know I'm okay with that stop to get taken out of the market. If you're not okay with that, then do not take the trade. That's another thing. If you're not 100% confident about the trade, don't trade it. When you take a trade, when you hit buy and sell button on your MT4, you have to have high conviction. You got to be like assured of this trade. You know, like when I ask you, if you take this trade, are you 100% positive that that's a good, solid trade setup? And then some of you guys will say, I don't know. I don't know exactly. But if you don't know exactly, then that's where you use maybe a test trade, a feeler trade, but you don't go in big. Okay, you just test out the market. Now you can see what gold is doing. It came back up here, it got rejected. Okay, so a lower high rejection. So even all these traders with their stops above here, they're still live, they're still in the market. This did not come out and tap out that liquidity. So we still have selling pressure in the market. Yes, if you took that trade down there, you went into 10 pip drawdown. That's standard for most trades. Okay, if you don't nail it right away, and then you go right into profit, you're going to probably have to deal with a little bit of drawdown. Let's be real, okay? So I want to keep Fridays as real talk as well, okay? I don't want to make it look like every single trader, make it look like, yeah, we nail trades, sniper entries, and we go into 100% profit all the time. It's sometimes it happens, but not all the time. I don't want to make it look like every trader who scalps the market can nail sniper entries and get in. No, okay? Let's be for real here. Sometimes when I trade, I go into drawdown, okay? So I want to keep it real with everybody. But if we do, we got to also watch what's going on in here. So yes, the bulls pushed it right back up, but we kind of targeted just about a little bit more than 50% of this volume. So we're going to see if they can still push it down. But once it comes up here, yes, then it might take out the highs. But sometimes something like this happens, okay? Where they do like a stop hunt raid, where they take out the highs up here, and then what happens is they grab that liquidity, and then before you know it, then it's a massive sell like this. Okay, so that's what can happen. The market knows there's plenty of stops up here. Okay, the market makers know exactly what's going on. Okay, so they know that most retail traders who took this sell down here, their stops are above these wicks. Okay, it's even I know this, and I'm not a market maker. Okay, so most retail psychology is a stop loss above here. So when the market knows that, it's logical for them to come back up here, trigger all these pending orders, take all of that liquidity out of the market, fake it to the high, maybe get some other buyers excited that gold is going to continue to break out. They buy, and then what do? Then they lower it down. They've absorbed all the liquidity, and now they're coming down to really break this support level. Then it really drops down. Okay, so things like this do happen in the market. But sometimes when we get stopped out, okay, You got to continue to follow the volume. That's why I trade one security like US30 all day, because I watch liquidity grabs. Sometimes I get stopped out, but that doesn't mean I'm done trading for the day, or I'm following what happens. So sometimes if I get stopped out there and it's an aggressive candle coming back down, closes below here, and then the official move, then I'll continue to maybe sell with the market. Maybe I'll recover my loss up there, and then I'll continue to trade with the market and make my gain back. So that's another thing, guys. I see that a lot of traders, when you take a loss, you kind of forget about the chart, you go look at something else. How many of you guys do that? Like if you get stopped out on gold, now you're going fishing over on Euro USD. Now you're going looking at US30. Let's take a look at AUD JPY, what it's doing. If you're losing focus, guys, okay, stay with that. You know why I stay with that security? I don't know. I don't even know why I'm talking about this, but for real, my psychology is when I get stopped out, they have my liquidity. Okay. I look at it like that. I don't look at it like they have my money, but they got my liquidity. So I like to consider myself as like a banker, you know, like I'm trading like, so I've left a little bit of liquidity in the market. I've lost, okay? For example, if I lost 20 pips on standard, I have $200 of my money sitting in the market. That's my liquidity. So I have to be confident now that I will come back and get my liquidity back. So if I stay with that security that just took my money, it's kind of like a paper trail. I'm following it. So I will make, and my next decision will be a better move. If I just get stopped out on US30 and now I start charting gold, and then I start going to GBP USD, and then I start looking at Apple or Tesla, I might forget everything what's happened with US30 when I can recover my money. So that's why I tend to stay with one security, and I follow that volume from London market open to Wall Street to mid-afternoon to power hour to the close of the market, because I follow all the moves of the market. Try and focus, guys, everybody, if you can. Try and focus on 1, 2, or 3 securities, and I can guarantee you will become that much better of a trader. Ingo, from New York session, you're still holding your NAS buy up 175 pips and secured. Amazing, okay? Look at that, guys. Our member Ingo, he had a NASDAQ buy from Wall Street, and he just locked in 175 pips. Well done. Okay, so then when we see this now, this move, it looks like a fake break. We didn't get that retest to come and push down. So now it's kind of like a fake breakout to the low. And now they're coming right back up into this area where we had multiple rejections. So we'll see what type of, what happens up here in this red box. Maybe if they can continue to push it down, it might come back, revisit this level. But we also have to keep in mind that maybe gold is going to continue to be bullish this afternoon. So if we kind of get that breakout, we got to watch what happens up here as well. Okay, and what did Euro USD do? It just bounced right off the bottom, okay, and then coming right back down. So it's too small of a zone to scalp in here. So that's why we're going to wait for either volume to redistribute to the upside or to come back down to the downside. Okay, and what is US30 doing? US30 is getting rejected up here. So no buys above here, okay. Got rejected, now pushing back down. So maybe, guys, maybe we get a nice little momentum sell today, this afternoon. So what we can do is we can watch this area. I know some of you guys are aggressive, and you're like, Ron, why are we not shorting this right now? Okay, you can. Okay, so if you want to get a little bit more aggressive, maybe if it breaks right here, again, you got to measure the move. I want you guys measuring the move. Okay, so if we take this, we break that neckline, coming down into this green box, about 20-25 pips. The yellow line could be 30 plus. And then we judge what happens down here. Okay, so I'm going to be waiting for US30 to maybe make a move down here. It had that impulse break. and then got gobbled right back up. So now if it comes down with more supply, we might close down here, push, fill that wick, break, and come down to here. Gold now is going after stops. Okay, so gold is coming up here. So for all of these traders that sold down here, most of their stop losses are located in this zone. Okay, so I want to see if this is going to be a stop hunt. Okay, I want to show you guys live how this works. Okay, so remember what I said. Are they going to maybe come up to take out all those stops? Okay, from this red volume, this candle. This candle had a lot of sellers. Okay, and maybe they wanted to continue to sell down in here, so their stops are maybe right here. So what the market might do is come to take out the stops, maybe a little bit more liquidity up to here, and then it's going to be a fake move coming back down into this red box, and then like a head and shoulder pattern. Then gold might break down later on. Okay, but let's see if it's going to be a stop hunt to the high, or it's going to be actually maybe a break and they close it and they trade it inside here, and then gold is coming right back up to 2018. And this is typical for a Friday. Okay, sometimes it's just trading sideways. At 3 p.m. okay, it's going to start to move a little bit more at 3 p.m. That's power hour. Okay, so gold now is coming again, playing around in this area. So we got rejected again. Okay, so came up again, equal high, tweezer high, almost just 2016. Okay, so it got rejected again. So we'll see. The next candle, are they really going to kind of impulsively break it out, maybe grab more liquidity, then bring it right back down? And then next week, guys, okay, so for everyone on YouTube, we're going to switch things up a little bit. Look for the schedule on Sunday. We're going to mix it up a little bit. I want to do like some, not just always like live trading. We know we love that too, but we got to go back to the basics of just education. Some of you guys are asking what are pips, what are points, what are ticks. So these are basic questions that everybody needs to know before we even hit a buy and sell button. If you don't know what these terms are, you can see like how much we need to learn. So I'm going to do one where it's just the, like for beginners, okay, where it's going to be intro to Forex, like terminology. We're going to introduce what is price action, the characteristics of a candlestick, things that you should know, things that you should learn that will better you as a trader, and we'll take it slowly with a new topic for each one of those sessions when we do those. But they're going to be strictly education, okay? So in a live environment, okay? I don't want to do like back testing. I like to educate in a live environment, but we're not always going to be just, hey, Ron, look at gold, look at oil. We want to focus. If you want, it's going to be labeled education. So you know, I'm telling you guys ahead of time. If you're here for education, join the call. If you're looking for that day for live education, we're going to be doing live trading. It won't be on that call. We're going to be looking more to educate, and then we'll have live trading sessions specifically for live trading. Do you guys like that on YouTube? Let me know, because if not, you know, like it's up to you guys. Like I know what a candlestick is. I know what pips and points are. I don't need to like continue to go over this for myself. I'm doing this for you guys. So you guys let me know if this is something that you guys want, you know, because I'm going to take maybe 2 hours, 3 hours out of my day extra to do this. Okay, so guys, what happened on gold? Anybody want to tell me what happened on gold? This is real time, okay? So we're not back testing. This is real time. So you know, I know some of you guys are in trades right now, so I can help break things down for you guys. What happened there? Ingo, tweezer top, rejection at supply. Erythrin double top, second rejection from supply. Nur got rejected in supply. Okay, and maybe, what did I say about stops? Did I say hunted the stops? Okay, psychologically, where are those stops? Like above the wicks. So that's normally what retail traders and most traders do. Guys, we're getting an impulse breakout on the Dow right above here. So, you know what I was saying? Most of these traders down in here, where do they physically place their hard stop? Above the previous wicks. Okay, that's normal psychology, and there's nothing wrong with that, guys. And that was about 20 pips from down here when I measured it. So that's normally what most retail traders do. Like, they were right possibly on the sell, but their stop was placed exactly where the market makers know they are. They come, tap them out, and then maybe they push the market down now. But how many times have you been in a trade where you get stopped out and then all of a sudden it's going back down into your direction? I've been part of that a million times, probably you guys too. So this is why now we need to really learn strategically how and where to place a proper stop loss. So sometimes if you gave it maybe a little bit more room to breathe, you still would have been in this trade, but you might have to lower your lot size a little bit to give it that functional room to breathe. This is what I find a lot of traders don't understand. But we'll help you with that. Okay, so now let's see if they really push it down and close it below here, then get a retest. Then maybe we will potentially get gold selling down here. Look at the Dow, guys. Okay, this is what I'm interested in. See, this is why I don't look at Euro USD at this time of the day. This is what I love. Okay, you guys see why I don't look at Euro USD? This candle right now, oh my God. This is a 40 pip candle, guys. Okay, like if you're following the 1 minutes, look at this. It doesn't get sexier than this. This 1 minute candle, 225 closed above, ignited, firecracker. Buy, close near the high, no pullback, continuing to drive. These are like three soldiers coming right up. Like, that's why when you ask me, Ron, why do you trade the Dow? Because in 3 minutes you can make 40 pips or 400 points, guys. That's why I watch Miss Jones all day. This to me is nice, but I need more. Like, I'm an impulse trader. Like, I need my personality. I need moves like this. This, I used to trade this. This, you have to have extreme patience for this. And I respect all traders that can trade this. This is more for beginners to get learning. And then once you really polish up your skills, then come join us over here on and have a piece of Miss Jones. But you see how it was building? Pullbacks were coming right back up. Pullbacks. You do not sell today until there's a break of structure. Look at Bookmap, like how it came down. These sellers, you see these big red bubbles. Okay, a lot of you guys look at red bubbles. This is trapped volume down here. Trapped volume, trapped liquidity. Sellers getting trapped. That's like, you know, when we sell and we go into drawdown. That's us right here. These are retail traders selling the low when they don't know that they're selling into bids. And now the bids, this is like the discount buy. There was all those pending bids waiting to get, they were welcoming it to come down here. They wanted it to come down here. And once it built and it broke out of here, there's that move. Like, look at the volume, how dead it was. Look at here, the volume, and then look at these bars now. Like, look at the volume increase. This is all bids. This is all buyers. Take it right back up to a local area. Now, if you look to the left of the chart, where are we coming up to? Okay, so normally I see over here, there's some wicks over here. You can locate that area. So when it comes up there, that red line, that's kind of like a target. Okay, you know, normally I would have if I was trading Dow like myself all day, I would have a red line there. So when it comes up there, 35, 40 pips, you got to know it came right up to that red line. Beautiful. Filled up. Let me go full chart to show you. Okay, do you see where it came up to? Over here in the past. Okay, over here. There's a pivot point right there. Now, like even above here, like above the yellow line, I have nothing. Okay, so if we have a big daily break, where would it go up to? It's possibly going to come up to here. 33698. Why don't we just go psychological 33700? Keep it clean for everybody. Right there. I don't make these numbers up, but I look at structure. Okay, and then if we continue to push up, here we have a lot of resistance and impulse moves. Here's your next scalp, again, right over here. 33737. Okay, let's keep trading simple. Look at this, another ignited candle, no pullback, testing to break the high. If it does, we may populate up to that daily yellow line. Guys, oh, this is too sexy. She's so sexy. Mohammed, you made 220. Good job, bro. Good job. Okay, and then pullbacks, guys. Where could we pull back? Again, we see the big base of that candle. If we pull back, maybe we're going to pull back into half of it. Okay, so you got to start to keep going through the motions, guys. If we pull back into there, maybe 50% of it. Now this big red zone, we got to flip it green. Maybe it comes back down in here, and then we pick up bids. So for selling, we can't even look for a sell until maybe we break 50% of this, unless you want to short a wick. But remember, when you're shorting a wick, it could just be a quick pip and dip, but you're shorting a train running right now. Like, dude, this is going to come right up to the daily, guys. Oh my goodness. Like, oh, Friday was amazing today, guys. I cannot tell you how good Friday was. So you wonder why we need discipline to stop trading. It's because of this stuff. Like, it's addicting, guys. This is like, we can develop this into an addiction. Believe me, I used to scalp 24 hours a day when I was younger, before I had kids. But now you can have a trailing stop loss. But these are those ignited candles. Guys, next week's webinar for us is going to be firecrackers. Okay, I'm going to explain what the firecrackers are in more detail. But there we go. We're going to possibly pop up to that beautiful fill. Guys, short sellers are getting squeezed like lemons today. Okay, I'm being honest with you. Short sellers are getting squeezed like lemons today. Do not be a lemon today. Look at this move from this official breakout here. It's cleared already. 50 pips. My goodness. Okay, so you want, like, as much as I want to look at Euro USD and gold, like, let's look at it, okay? Let's compare. Okay, so look at how beautiful Dow is. Okay, Euro USD, it's nice, it's building. Let's look for a breakout here. But like gold, I know everyone has attraction to gold, but look at what we're trading when you can trade something so beautiful like this. With zero commissions too. Okay, that's another thing. When I used to trade gold, believe it or not, guys, I have the commissions to show you guys. Who wants to guess how much commissions I used to pay my broker trading gold monthly? Does anyone want to take a wild guess? And I have proof of this. I will show you guys real proof. Does anyone want to guess? Honestly, I'm telling you guys, when I used to scalp gold 24 hours a day, how much my monthly commissions were? 10K. Mustafa, you got it, bro. I was 10K a day. I was trading with 5 and 10 lots. 5 lot is $22.50. A 10 lot is $45. So I was trading roughly, commissions were $500 a day, which was $2,500 a week and $10,000 a month just by trading gold. Whether you make money or you lose money, I was $10,000 a month. And then I knocked some sense into myself. I said, why am I stressing out trading a manipulated security, wasting 10 grand a month when I can put that in my kid's pocket, or I can give it to a homeless guy on the street or something like that? And then why don't I go to something that trades a lot better and zero commissions? You know how much my commissions are now monthly trading US 30? Zero. So all of that extra $10,000 in commissions I was wasting on gold, that money is in my pocket and I can do whatever I want with that. Like, you can go on a vacation. I look at it like that. I can go give it to a homeless person on the street and say, here's my commissions, enjoy it. Why would I want to make my broker rich? My broker, who I was doing that with, is Fusion Markets, but any brokers trading gold are about $7 a standard commission both ways, or $4.50, you know. Greg, if you want it, yes, I would rather give it to you than the broker. Honestly, I'd rather that $10,000 in your pocket than the broker's. Okay, do we see now? Any questions about gold? Now we're officially breaking down. Why? That last liquidity hunt. Okay, so see how we can do live education right away. Do you guys want to review that? Do you guys understand what happened here on gold? Okay, it was a sell, but the last bit, well, the last grab was that last stop hunt. Okay, do you guys understand that? You got to learn this stuff. Okay, the faster you learn this stuff, the more successful you're going to be at trading. I promise you that. Mohammed, do I trade prop firm company? Yeah, I have a live 300,000 MFF. I also have a live accelerated. I started with 50,000, and I have that account active as well. And I also trade my own money with my own broker. And I also have like HankoTrade that I like to trade with crypto. I like to deposit crypto. I like to get paid out in crypto too. Okay, so do you guys see now? US 30 is filling. Look at, we're continuing. Look at all of these short sellers are getting trapped. But now we're officially coming up to maybe a higher time frame area. The daily, the yellow line. So now maybe we're going to have some pullbacks, but have a trailing stop loss. So at each ignited bar, for example, if you bought anywhere on this candle, have your trailing stop loss below this ignited bar. As it moves up and breaks a new high, have your trailing stop loss below this open. If we continue to move up, bring your trailing stop loss like 50% of the candle. You're maximizing as much volume as you can, and the more you maximize, you're maximizing money in your pocket. And eventually, yes, you're going to get tapped out, but you're securing everything along the way. Look at this, gold, beautiful now. Now it's the official close, retest, and now it's going to drop. Here's the shooting star candle, going to break. So it all started with this liquidity hunt right here that I was telling you guys about. That's where it all started. There's your drop in gold. So that's why that was a specific move in the market to come up here and do that, and that's why I'm not surprised gold is dropping right now. Okay, did you guys understand that? So how many of you guys got stopped out on that? Be honest. How many of you guys sold this red candle or down here and you guys got stopped out? Let's be honest with ourselves. Okay, let's not BS anyone here. We're all honest. Okay? If you did, I know exactly why you got stopped out. And I'm not a market maker, guys. I'm just Uncle Ronnie. And I'm telling you guys straight up why you guys got stopped out. Captain, you got stopped out on US 30? What do you mean? Like stopped out in profit? Like your trailing stop loss, or? You were in a sell. Oh no, 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 no! Don't be in a sell. Where did we say sell? Nowhere to be selling. This is what I was saying the whole time. You don't want to sell a train that's moving, or else you're going to get run over. Oh, way earlier. Okay, no problem, bro. But let's work on that, okay? Let's work on those things. We can work on it, okay? No problem, guys. Trading is a work in progress. You know, it's a work in progress. Believe me, we have all taken losses, everyone here. So let's all work on that, okay? Come back stronger. Make sure you guys are doing journaling over the weekend. Figure out, like if you got stopped out of this trade right now, like if you had no idea like to come back and to journal this, maybe you need to come back and see the structure of the market, what exactly happened in here. And there's like a nice little drop. Like if you were still holding that, maybe if you had your stop maybe above the complete supply zone, now you push down. But what's Euro USD doing? Okay, so we're attempting to break out of here as well. It's on low volume, but it's still building. Okay, you see how like Euro USD is like a snail, but it's still moving. Patrick, are we looking at NASDAQ? I think this is enough, the three charts. I only can go maybe like another 20, 25 more minutes because I got to go pick up my kids. But if you guys want, we can do a NASDAQ chart if you guys want. It's up to you guys. Captain, I'm always here. You know, myself or Dave, whoever it is, or, you know, the snipers are always here, guys. Okay? Whether you're in our program or you're on YouTube, we're always here. Okay? You guys are snipers too. We're here. We need to empower everybody. We need everybody to be good, solid retail traders. And we need you guys to start liquidating banks. We need you guys to put money in your pockets. The banks have been taking us since the turn of the century. Now it's our turn. Okay, look at ignited bars continuing to fill. Like, this is what I mean. Fridays can be fun and Fridays can be horrible if you're on the wrong end. Today is a short squeeze currently in the market. Maybe going into power hour, things are going to change. But right now, like, let's review. Like, every single pullback, it's going back up, pullback, going back up. Look at these wicks. They're just they're just coming into demand, and we're continuing breakout. Like today is a official bullish day. Remember what I told you, that daily candle? Do you want to be a short seller on today's daily candle? I hope not. This is what I was showing you. If you were shorting, you're shorting, holy, like look at the size of this candle, guys. How big is today's candle? Look at this. Like you're shorting about 580 pips right now. Okay, that's what you're trying to short. It's not going to work. Like look at the depth of market. These bids are just destroying all of these offers right now. Okay, so trailing stop loss, my friends, if you have the trailing stop loss below every ignited bar, maybe now below the white line, you've secured that entire load, right? Oh my goodness, guys. Unbelievable move, guys. Okay, unbelievable. Now we're getting a move on Euro USD. Okay, so this is the official impulse break. Okay, so it's built up. It's had a double bottom. So let's go back to look at Euro USD. We had a double bottom. There's the neckline. Okay, double bottom. We kind of flagged. Now we're pushing up. So this is the first official volume breaking out of this area since 125. Okay, kind of over an hour now. So let's see where this volume is going to close. Okay, that's about 50% of the red candle, the yellow line, and that's a daily area. But if we close, then what we're looking for is maybe there's going to be some pressure to push it down. Maybe we'll push it back down to where the breakout point is or a little lower. So then when it comes down, we're looking to see will it hold structure and get more bids. Then maybe if we take a buy, then what we're aiming for is for it to move up into here. Okay, but sometimes these moves are false moves. They can be fake outs. Okay, just like if we're playing basketball, if me and you are playing one-on-one, you're gonna fake me out, I'm gonna fake you out. You know, that's how everything works in sports, in trading. There's gonna be fake outs. The market makers are trying to fake me and you out. Okay, so we got to be smart and we got to kind of pick up on what they do. What is their game? We got to learn their game. Once we learn their game, it's a game of chess. They make a move, you and I make a move. Okay, so what can happen here is we got to understand every single scenario, what can happen. So if this candle closes above, if the next one comes red, bearish, engulfing, does this and shoots down, we know it's a fake out. Okay, they faked out. So that's why now I assume every single candle is coming down red now. When it comes down red on the breakout, I'm looking for it to retest. So I'm just looking for it to come down. See how it's coming down red? Okay, so let's see, will it come down to the official area where it broke out? So this red zone, I flip it green. To see now, like if you don't have Bookmap, this is what you got to kind of visualize, that this area was supply, and now if it comes down, we flip the book, kind of like here where we flip the book. We can see visually Dow Jones, but see now how it's coming down red. Okay, so if you bought the impulse, it's nice. Like I like buying impulse candles on the Dow because they move 10, 20, 30 pips on an impulse, but when you're trading Euro USD, it's a different security. So we came down, you can see the wick. Oh my goodness, Dow is continuing to squeeze hard, guys. Gold, okay, pullback, lower high, bearish engulfing candle. Gold looks like it wants to continue to break down. You can continue holding your sell on the pullbacks. Now remember that new red line I found, 33,700. That could be coming up to there for the Dow. Okay, so this first official red candle came down and it's got a wick going back up. So if it kind of holds, we can possibly look for a buy on the Euro USD if this is something that you like. It came down, it's still holding. If you want to maybe wait for this candle to close to give you another confirmation, but you can see what's happening. It's coming down, picking up a wick. It might officially break the previous high and then shoot up to this yellow line and maybe a little higher. If it's too soon for you to enter the market, then maybe wait for another opportunity. Because what could happen is here, it might trade sideways. The first time it breaks out, sometimes it takes a while before it builds up for it to really break out. It might come back down, consolidate in here, and then form a bullish flag, and then break out of here. But if you feel comfortable, like you feel that it's enough, it's tested, it's held, then if you do get into the trade, the next thing is you got to know where to place your stop loss. Okay, so right now it's still bearish engulfing candle coming down. So let's see now. Remember, look at the time, how much time is left on a candle. This is a 5-minute candle. Okay, we've only exhausted half of it. 2.5 minutes. So that was the first 2.5 minutes. We still have another 2.5 minutes. It's kind of like the second half. So, you know, like if you watch basketball, you know, you can't judge a game in the first quarter, second quarter, third quarter, fourth quarter. You know, anything can happen in a game. So this is a 5-minute candle. We just went halftime, and now the Bears are in control, bringing it right back down. So if this closes engulfed down here, this to me is a fake out. They faked out the market to the high and bringing it right back down. And then this might bleed back down into here. That's the, Jonathan, that's the giddy laugh of someone with runners. Yeah, that's why I continue watching like US 30. Like this thing is unbelievable, guys. If you guys got... What do I recommend that you read about scalping? I honestly, to tell you the truth, I don't know. I've never read anything myself on scalping. Scalping was, I'm self-taught. I learned all this by myself. So I'm trying to be honest with you guys. I really didn't read any books about scalping, to tell you the truth. I just learned by being exposed to the market, scalping 1-minute candles for a long time. So gained a little bit experience. I'm not saying I just, with experience, that's all it is. Anything you guys do with experience, you're going to learn. Okay, so I've learned with experience how price action moves. I didn't really read any books on specifically on scalping. Yeah, there you go. Captain Naked Forex is a great book. There you go. If you guys want to check out Naked Forex. But if you want to join us, subscribe to the channel. Like we're going to do more of this. Myself, Dave, you know, we want to do more education too with you guys. So subscribe, hit the notifications, and learn with us. Have fun learning. You can ask questions. We want you guys to do really well. Honestly, believe it or not, we want to see you guys do good. I should write a book. I got no time, brother. I got no time. I got no time. I would love to. Okay, so here's the nice rejection. Okay, so you see now, came down to that demand pool. Now, let's see if Euro USD gets ready now for maybe one more pullback and ready to go. I don't trade Euro USD too much, but maybe I'll enter into a trade as well with Euro USD. I have a very nice spread with Euro USD. I have 0. Okay, so I'm going to buy. I'm going to enter right now. Okay, so I'm entering. Okay, it's a nice, maybe a 3-bar ignited play, going to break out maybe up to that yellow line, but also I'm going to factor in where my stop is going to be as well. Okay, so stop. Traditionally, most people put it right below the previous low, right? That wick that came down. But if you did that with like kind of gold, you got stopped out there. So maybe if we put our stop a little lower, maybe 50% of this body of this candle, okay? Now you got to get your ruler. So I bought right now, okay? So if I get my stop hit in the market, I'm risking 6 pips, 6, okay? Remember, this is Forex, okay? So normally I'm risking much more when I trade gold or US 30, but that's 6. Maybe if I want to be below that wick and 50% of that candle, because I really want to allow this thing to maybe breathe and break out, how much now am I risking? Okay, I bought up here. So down there is roughly 10 pips. So that's what I'm going to do. I'm going to place my stop down there, roughly 10 pips, in case it pulls back into here. I'd like to see it pick up bids and accumulate for maybe a move going into power hour. And Dow is just a pig right now. Oh my goodness. Guys, the next red area is 33,737. Okay, so and then what I'm looking for is a move on Euro USD to break out of here. If it comes up to the yellow line, yes, that's a target, but 3 pips is not enough for anybody, okay? So let's be real. We need to get this thing to break out, maybe to come up to here. That's about 6 pips, but I'm risking 10. So I want to at least get a 1-to-1 on my money. So if we can move right back up to that supply area. Wow, guys. Guys, like, do not, like, today, do you guys understand what a short squeeze in the market is? This is a textbook Friday short squeeze in the market. This is crazy, okay? And it all started 9:30 a.m. Eastern Wall Street, right here. You know when this move started? It started right here. This candle that closed above, there was the retest of the daily at 9:30, and there was the firecracker break. And look at 50% of this candle, if you guys recognize that. We did. Here's that box. Look at the pullback today. Right there. It tapped and it was gone. Okay? So these buyers are not fooling around today. The institution is not fooling around today. They are just eating up short sellers going into a weekend. Maybe power hour, yes, it could possibly reverse. You know, it might provide a very, very good sell going into power hour. But right now, you do not want to sell an individual candle, because if you are, this is you. You're selling into bids. You're selling into bids. I guarantee you, like come 3 p.m. after, yes, then we're going to start to get a correction in the market. Okay. Nasdaq's going to clear highs. Yes. Guys, look at Apple. Look at Tesla. What is their percentage today? Have a look. Everybody look at Apple and Tesla. Check them out today. Okay, and then a lot of traders are just kind of fooling around with gold. You know, like that's why I tend not to focus on gold too much, because look at how beautiful indices move. Like they are like gorgeous. Look at this. Oh my God, guys, this is getting crazy. Are you guys still running Tesla 5.6%, Carol? Thank you. Yeah, Apple 5%. Okay, what's driving Nasdaq? Apple and Tesla. What's driving US 30? Banks are up. Okay, banks had a big move today. There was an announcement that they're going to take away from short selling banks, and today they popped. Like PacWest, it's up. It was. Let me see what it's up right now. Pac West, 83% today, okay? It was dumping, but look at today, okay? It's up 83%. Pac West Bancorp. Got to follow those little banks. Okay, so now I'm in this Euro USD. Okay, I'm fighting for 1 or 2 pips over here. When this is why I like to trade US 30, guys. I'm over here now, but let's analyze for everybody else that's you're a beginner. Okay, so we closed above with good volume. Now we got a little doji candle, but this is an important area on your Euro USD. It's a yellow line. This is that critical daily area, 1.1027, that we're going to try and break. Yep. I think we're going to squeeze all the way US 30 right to the top, guys. The top of the squeeze is 33,760. Okay. And then you guys better be getting margaritas on a Friday up here. Oh my God. Every single bar is an ignited bar. This is disgusting. I'm sorry, guys. I'm really excited about US 30. It's my baby. Yeah, now gold. Okay, so gold, that's it. They took out the lows, took out the lows. This is why gold it's difficult to trade. Okay, they're taking out highs, they're taking out lows, and now they're bringing it right back up. So now it's officially taking out the stops. That's it. Gold could be gone now. So this area could be bullish, and they've taken out the lows now going into power hour, and we might see a big move bullish on gold. And then this is where maybe we're going to see the market shoot down. Okay, so going forward, 3 p.m. Gold, bullish. It could take out these highs of 2018 up here. Euro USD, I'm in the buy. Okay, so what's happening now is the retracement back down to this level. Again, it's doing its job. It's testing 50% of this bullish candle. Let's see if it can hold. If it comes back in, it might come back into this consolidated area. But we're looking again to build higher highs on Euro USD. And then what we want to do is get some green volume to close above this yellow line and retest it. Then we might continue to break out strong and fill this imbalance to the left we have going on over here. Wow, guys, like look at. They're just taking out everything here. How many of you guys love trading the Dow? I do. I'm raising my hand over here. You guys can't see me, but I'm raising my hand. I love trading the Dow. If everyone wants to raise their hand, okay. If we're all on the same page and we can trade like Dow together, and we're all on the same page and we understand how it moves, we can do really well together. Like, I'm just being honest with you. I'm in like Euro USD. I'm in a trade, but I'm not really as passionate as I was before back in the day to trade these things. Gold, it's a love-hate with gold. I used to trade it a lot, but again, I don't like giving the broker $10,000 a month, so I want to stay away from that. But this is, pick a security and master it. I'm sure that either NASDAQ or Dow, I'm sure you guys will fall in love with it. But now, okay, 3 p.m. Now let's get serious. This is what's called power hour. This is the last trading hour of New York Stock Exchange. This is when a lot of transactions are happening. Number one, we have scalpers who are closing positions in and out. We love the volatility. This is where scalpers are coming in and out of the market now, maybe to secure some pips for the weekend. Also, we have intraday traders who have been maybe holding a position all day and they want to close before a weekend. They'd like to cash out. Transactions need to occur. We have also swing and position traders right now who want to maybe open up a position to hold over the weekend. They're swing or position traders. Those transactions are occurring. So there's going to be an influx of volume coming into the market, okay, this last hour. So you have to be very careful. And it's also on a Friday. So see now, okay, it kind of maxed out its move and now we're pushing down, okay? So it could come down and go right back up again. But this looks like they kind of pinned it over here and now it's pushing down at 3 p.m. Does this surprise me? No, it doesn't. But that's why you cannot get greedy, guys. If you bought anywhere on this leg coming up, you have to have a trailing stop loss or secure some profit, because it could come down. I've seen moves on Fridays go all the way up and then it comes right back down, going into like 3:30 in the close. But just be careful, guys, okay? I have about maybe 5-10 more minutes, and then I have to go. Elaine, have a great weekend. Congratulations. Congrats, everyone. Brandon, 131 pips on Dow. Delighted. Good job, man. Yeah, it's just the start. It's just the start, guys. Okay, so now we're getting a sentiment market shift in the market, a change of volatility. It's a new hour. It's power hour. Everything changes now in the markets. Okay, so this came up to, we have a big red box identified. So it kind of came right into this critical area. So that's, that's a maximum move, guys. That's maximum move. You cannot, we got to all be on the same page here, guys. A move like this that is running approximately 140, 150 pips, and you don't secure anything on that, and then it comes down, you guys are gonna make me lose sleep on the weekend, and that's the only time I can sleep. Just don't be that person, okay? I know you might want 200, 300, 400 pips, we all do, but secure some money on a Friday. It's nice. You'll have a good weekend. It gives you motivation to come back on Monday to get into these markets. I'm gonna ask a serious question, and for everybody. Is anybody doing like a real withdrawal from their account today? Like I want to know if you guys are doing this on a weekly or bi-weekly habit. Like it's a job, like a paycheck. Whether it's using a funded account or you're using your real account. Does anybody actually physically feel like, I know when we're trading, a lot of this is unrealized gains. When we're looking at our profits on MT4, it's nice. We're up $100, we're up 500, we're up 1,000. But how many of you guys actually realize the money by doing a withdrawal? You put it in your bank account, you pay your cell phone bill, you buy some groceries with it, and then it's real. You guys understand that you're working your ass off in these markets, and that's real money that's helping you in your day-to-day life. There's a lot of traders I see that just keep compounding their accounts. They never withdraw anything, and then a day like FOMC cleans them out. So you got to make sure that you realize gains. It's good. It's gratifying at the end of the week, but weekly, bi-weekly, if you can. I know a lot of traders are not there yet, but when you get there, it's the best feeling in the world. And then it makes everything, like all week, all your sacrifices, all your dedication, the time away from your family, those early days where we're getting up for London market, all of that. And then then you get to enjoy it with your family at the end of the week. So that's what the real life of trading is. A lot of people don't want to talk about the real life of trading. It's not easy. We get up really early in the mornings, trade throughout all the day. So it's a lot of discipline, a lot of sacrifice, a lot of hard hours. When people say, is trading a job? Of course it's a job. It's like any other job you do. Some traders are trading longer than 9 to 5 hours, but you don't need to do all of those hours if you don't want. If you're a scalper, like this time of the day, come in at 2 o'clock and watch the 2 to 4 o'clock move, you could have came in today, grabbed this, and you're out. Okay, so guys, I'm still in this Euro USD. It came up to that daily. I'm not a trader that just goes for 3 pips. So now I'm in drawdown, but I'm accepting my risk of 10 pips down here. I'm going to let it breathe to see if it comes back down. Maybe now pull back, pick up more liquidity and go up. But I have a hard stop in the market at 10 pips. I'm going to realize this. If I lose, okay, I'm going to lose. I'm going to accept the loss here. But I'm also giving it some time. Maybe it wants to come back down to this demand area and pull back up. So sometimes you got to let some trades breathe. I've already accepted my loss. I know how much I can lose on this trade. I'm okay with it. So that's why I'm okay with this trade. It looks like a big red candle, but I'm like 4 pips in drawdown. Okay, 4. I know it looks like a big red candle, but this is a Forex candle. Okay, if this was Nasdaq or US 30 red candle, this is 20, 25, 30 pips. Now I would be making a big decision. But here, this is Forex. It's completely different security. So I have to have a different mindset when I'm trading this as well. Okay, guys. So everybody in the Zoom, I hope you guys had an amazing week this week. You know, it was difficult. Wednesday for everybody was a tough day, guys. Wednesday was no joke. Wednesday, all sessions, London, Wall Street, after close was rough. But yesterday was much better, and today was really good too as well. So you got to understand as a trader, if you have a really bad day in the market or there's bad volume, come back the other day. You got to understand that there's going to be better opportunities too in the markets. Okay, it's not always just blow everything on one day. Take your time. Next week we'll do something a little different, guys, on YouTube. Maybe I'll have like one session that's like a specific education intro to Forex for beginners and price action. So we're gonna go over the basics. And if you guys know all of the terminology and everything about price action, then maybe this is not for you. But I want to go over, like, for if everyone is like a beginner, and start fresh with everybody, because I see some people are asking, what is a pip, what is a tick, what is a point. These are like things we have to know before we even trade. These are things standard we got to know. You got to know the terminology of the market. Okay, so we'll go over all of those things. We'll do it in a live environment. We'll talk about everything. I really want you guys to learn number one, the characteristics of candlesticks, so you guys know all about this, because we are price action traders. Okay, you see that I don't have too many indicators on my chart. I don't really rely on too much indicators when I trade, but if I do, I'll add the 9, the 200 EMA. I'll maybe add, I like to look at RSI specifically for like divergence. See how high RSI came up to? 82, 83, you know, and look at it, it's still going back up. Okay, so that's just a small pullback. So now we have to really wait for structure to break. So going into the end of the day, okay, if it kind of breaks below here, maybe this is where it might sell below the 9 EMA, below this structure, and sell down here. Otherwise, you're selling again still into that train that still wants to run. You have to be very, very careful. Okay, and I'm like 1 or 2 pips away from being break even on Euro USD. Maybe I'm just going to close this trade at break even, but I'm going to let it run. I want to see what happens with this thing. So thank you, guys. It's 3:07. I just want to let you guys know. Okay, so if you're looking for a broker, HankoTrade, AAAFx, check them out. This one, AAAFx, gives you a deposit bonus, guys. They'll match your bonus. If you put $500 in, they'll match it 500. So when you're ready, start off with a demo account, and when you feel confident that you're ready to trade, if you deposit $100, they match it. 500, they match it. 1,000, they match it. They'll double it, and you keep all the profits after that. So that's not a bad deal. If you guys want to do a prop firm route, they're not bad, okay, but you got to have the right psychology, the right risk management to pass these, beat these. We got traders in our group who are learning now, finally, how to beat these things after a lot of struggle. So it's all done with proper risk management. If you want one of these, guys, we have a code, Stocksnipertrading. We'll get you 5% off an evaluation, so that helps money in your pocket. But if you want to join our team, guys, we really want you to be part of this, okay? As much as you are part on YouTube, you can be part of a group on all of our private Zoom sessions with myself, with Dave, with PK, with Yoda, all day knowledge, dropping nuggets in the group. We have all of our members too in the Discord who are sharing charts all day and analysis and helping each other out. So it's around the clock. It's nice. So we'd love for you guys eventually to join with us. And hopefully we can help guide you and help you in your journey to the best of our ability that we can. We really take pride in our mentorship. It reflects on us, you know, it reflects on myself, it reflects on Dave, it reflects on everybody in our group as well. So so we're really passionate about what we do. I wouldn't be doing this if I wasn't passionate enough to be doing this, but I really I get enjoyment by watching how successful you guys are turning out. and changing your direction as a trader. I wish there was somebody to do this for me when I was learning. So I hope that we can be those people for you. Or we don't want to look like mentors or anything like that. Just we're all in this together, okay? We're all in this together. Let's trade together. We win together, and sometimes we're going to lose together. That's the part of the game. But hopefully we're on the winning side of the markets. That's what we want here. Okay, so guys, I got to go pick up my kids at school. They are very important to me, as much as you guys are very important to me too. Uncle Ronnie has got 2 kids. I'm the bus driver. I got to go pick them up. I got my son's friends. You know, it's a party in the car. I got like 6 of them. I'm driving them home. I'm like the soccer mom every single day. I pick them up and I'm taking all these 11-year-old kids. They're telling me, can I blast Eminem and 50 Cent and things like that? They want to listen to all that music. So I enjoy it. I have fun with them. And I'm also scalping 1-minute candles while I'm doing all this. So if Uncle Ronnie can do it, you guys can do it too. I don't recommend trading and driving just yet. It takes a little bit more experience, but take your time with that. But maybe one day you'll get there. And everybody, thank you guys. I had so much fun with everybody this week. Everyone in Zoom, amazing. Guys, enjoy your weekends, UFC, NBA playoffs. Hopefully the Toronto Maple Leafs lose and get eliminated from the playoffs. I can't wait for that. That's going to be really exciting too. And stay tuned, guys, for our schedule coming on Sunday. Make sure subscribe, like the channel if you can. Help us grow this together. And share the channel with your other trading groups if you want, your other communities. We'd love for more of you guys to come on here and we can help you guys out. If you want to join our program, we have signals alone. A lot of traders are just interested in signals, what we do, what we break down. So that's what I showed you. $1 a day. We'll get you signals with charts, with updates, with breakdowns daily. You can get that. But I suggest just more than just the signals is learn how to also trade. So come into our group for the membership for the extra $20, and then you can really learn. That's where all the education is. We've got courses with quizzes, webinars, boot camps, all of that stuff, all of the Zooms you can be part of, like all of the other live trading we do with all of the different educators here. So that's what we want you to be part of. And hopefully maybe you guys can turn in the right direction and become very profitable, consistent traders. That's what we all hope for everybody here, and hope for the best, guys. Okay, so stay positive. If you had a bad day, bad week this week, okay, we've all been there, we've done it, okay, but it's time to learn this weekend. Learn, okay? Let's go back to the drawing board, you know. So sometimes, guys, sports analogy, Michael Jordan, Kobe, LeBron, they get on the court, they miss a couple shots, you know, they miss, but they're right back in the gym and they're working hard, and then they come back and then they have an amazing game the next day. So you got to look at it like that too. You might have a bad day, a bad game, but you got to come back strong. Don't lose focus, but learn from your mistakes, okay? I saw some of you guys were shorting these moves. Let's be honest, some of you guys were shorting. So I ask you guys, why are you shorting this move? That's what we got to learn. You know, you're shorting you're shorting into bids. It's not going to work. It's not going to work until structure breaks. Now you can start to see spin tops. Now you can start to see a little consolidation. So going into 330, if this continues to consolidate like this, then we might see structure break, and then there might be a sell opportunity below here. Okay, let it come to you. So what we'll see is maybe a break at the end of the day, something like this, then a dip down into here. That could happen, okay? But no guarantees. It could break, false break, go back in, and then all of a sudden it's a short squeeze at the end of the day, continuing to move. So just be focused on that. Guys, just an update, I'm still holding my Euro USD. So you see how it just came right down to the demand area? I was down 4 pips, but didn't panic. Now it's right back into profit where I bought in. But maybe now with this momentum, we're going to have some volume now to break out of this daily, and then maybe we're going to collect our 10, 15 pips up here. And then if it starts to run 10, 15 pips, I'll take my stop loss, and then I'll go to a direct break even trade, and then I'll hold it, and there I have no risk. I have no anxiety in the trade. Worst case scenario is break even, and then hopefully it runs 10, 15, 20 pips. Okay. But that's it for me, guys. Thank you guys so much, everybody. Appreciate everybody on Zoom. God bless. Have a good weekend, everybody. Stay safe, and we'll see you guys. I'll be in the Discord on the weekend with you guys if you want to chat in there and have some fun. And guys on YouTube, thank you guys so much. Appreciate all of you guys. Thank you for joining us, the likes, the subscribes, listening to all of that what we spew every single day. Appreciate it, guys. But we're trying to grow this channel organically with you guys. The more likes and we get and the more interaction, you guys probably know how YouTube works better than me, but we can reach more people around the world who are searching for live trading and education. There's a lot of countries out there that can't afford $1 a day, but if you can help us reach them by liking and subscribing and commenting, it helps grow. So then we can reach more people around the world and really help people. That's our mission. So believe it or not, like some people say, Ron, why do you guys do this? That's why we do it. I come from a poor country, so I would love to reach out and help as many people as we can in my country as well and around the world and things like that. So together we can do this, guys. Thank you. Okay, guys, have a good weekend. Thank you, guys. God bless.
Hey guys, good morning.
Have a good weekend,
everyone. Welcome to another live session of Stocksnipertrading. My name is Dave, guys. My partner.
Post your results if you guys can
business here, guys.
in the Discord.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra low commission, which starts at 99 cents per lot. Our accounts spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AAAFx, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.